Well, the dollar is now less than a cent above parity and looks set to break below it in the next few days, unless there's a sudden swing back to the right in European politics. Hardly likely. 7 months ago, markets were certain that Greece was heading for bankruptcy, and as a result, the Australian dollar fell to 95 US cents at the start of October. The latest sell-off is more about uncertainty than the certainty of default in Greece, but things could firm up on that score in the days ahead. Nevertheless, the Australian share market has broken below the trend line that's taken it steadily higher since the days of crisis in late September last year. At the start of May, the All Ordinaries had gone up 14% since the start of October, against a 20% rise by the global index. So far, the old rhyme, sell in May and go away, is holding true. The index is down 3.7% this month. The All Ords closed down 1% today, with the biggest losses suffered by resources stocks, led by Iluka, which also cut zircon production and was smashed for its trouble. Telstra and News Corp were about the only leading stocks to go up. And Woodside and Newcrest took a tumble today because both gold and oil fell again overnight. Oil in New York is down to $97 a barrel, its lowest price since February. Here's how European markets and Wall Street finished last night. Not very flash at all, especially in Athens. And finally, a quick look at what Wayne Swan is up against, trying to bring home a surplus next year. The Australian Economic Surprises Index is well down into nasty surprises territory. Now, Treasury and the Reserve Bank have been about the most surprised of all by the weakness of the Australian economy, but they're sticking with the forecasts of a return to trend growth. They'll be hoping last week's rate cut gets this line pointing up again. And that's finance.